general concept of monetary policy and how it affects businesses in Cambodia using a recent banking crisis and as a real example. So in the early 2026, public concern grew after a commercial bank in Cambodia temporarily suspended several banking services including deposits, withdrawals, and card payments for several days. And the situation caused panic among customers and raised concern about confidence in the Cambodian banking system. This case demonstrates why monetary policy and banking regulations are important for maintaining financial stability and business confidence. Monetary policy refers to action taken by the National Bank of Cambodia to manage financial stability, money supplies, and confidence in the banking system. One major goal of the monetary policy is to prevent panic in the financial sector. The banking crisis began after the bank announced a 5-day suspension of many services, claiming it was due to system maintenance and digital upgrades. However, the long shutdown created public concern because customers could not easily access their money. Soon after, rumors spread on social media claiming the bank facing liquidity problems, the license could be revoked, and customer deposits were at risk. As panic increased, hundreds of customers rushed to the bank branches in Phnom Penh to withdraw money. Images of long queues and customers demanding withdrawals quickly spread online. The bank later introduced temporary withdrawal restrictions, including limits on the digital transfer and cash withdrawals to control liquidity pressure. So how does this connect it to monetary policy?
So when people suddenly withdraw a large amount of money from the bank, it creates what is called economic of bank runs. Bank runs happen because a large amount of money in the bank do not keep all the customer money in their bank. When customer deposit, a much amount of money was already lent out to the business or to borrowers. This is why Cambodian governors of a national bank, Cambodia, publicly reassures to their citizens that Cambodia banking system remains stable and urge depositors not to panic about their money. These situations affect a business in several ways. First, business became more cautious about borrowing and investing. Banks across the sector began tightening spending standards by requiring more collaterals, stronger financial records, and stricter loan evaluations. Second, customer confidence weakness. Some businesses worry about the accessing funds, paying suppliers, and managing daily operations. For example, a small retail business depending on banking, finance, and daily expansion plans of bank become more cautious with lending. Third, the crisis highlights the importance of a strong banking system. The National Bank of Cambodia played a key in supervising bankings and maintaining financial stability to prevent wider economic problems. Despite the crisis, Cambodia banking sectors continue developing through digital banking service. Banks such as ABA, ACDA, and WingBank continue expanding online and mobile banking systems.
Thank you for your wonderful insight, Ms. Nisa. So in conclusion, the recent banking crisis show how quickly confidence in the banking system can affect businesses in the wider economy. The situation demonstrates the importance of monetary policy and financial regulation in maintaining financial stability, customer confidence, business investment, and economic growth. When confidence in banks weaken, business may face difficulties accessing financing, consumer may reduce spending, and economic activity can slow down. For these reasons, central banks, as the National Bank of Cambodia, play a critical role in protecting the financial system and ensuring stability during the period of uncertainty. And that is it for our daily news. Thank you and goodbye.